Khanna urges the Biden government to take decisive action regarding the failure of Silicon Valley Bank. In response to the sudden failure of Silicon Valley Bank, Democratic Representative Ro Khanna of California urged the Biden administration to take decisive action to protect depositors and guarantee they will have access to their accounts on Monday morning. "I believe they are aware of the seriousness, but they must move quickly." In a discussion with President Biden and his team for Face the Nation, Khanna said, "Time is ticking. I believe American finance is safe. This isn't a systemic danger, in my opinion. Here is what will take place. Pull your money out of the local banks and put it in the Big Four," is the email that is being sent to every employee in these tech firms. Congressman Ro Khanna was interviewed on Face the Nation. In response to depositors' hasty withdrawals of money due to worries about the bank's balance sheet, California regulators abruptly shut down Silicon Valley Bank, which had its prior headquarters in Khanna's congressional district, on Friday. All insured deposits of Silicon Valley Bank were transferred to the Deposit Insurance National Bank of Santa Clara, which was established by the Federal Deposit Insurance Corporation, FDIC, after the FDIC was named receiver. Prior to its demise, the 40-year-old bank was the 16th largest in the United States, making it the biggest financial entity to fail since Washington Mutual in 2008, at the height of the financial crisis. According to the FDIC, Silicon Valley Bank had about $174.5 billion in total accounts as of the end of 2022 and approximately $209 billion in total assets. President Biden discussed Silicon Valley Bank and the federal response with California Governor Gavin Newsom on Saturday, and Treasury Secretary Janet Yellen stated on Face the Nation that she has been working with bank regulators to design appropriate policies to address the situation, though she declined to specify what those actions may entail. Yellen said the Biden administration is working to satisfy the requirements of Silicon Valley Bank's depositors, but she did rule out a federal bailout for the bank's investors. Khanna, however, asserted that the Treasury Department needs to show more clarity and greater strength, and that there is precedent for the Treasury to guarantee every depositor in conjunction with the Federal Reserve and FDIC in order to stop a run on local institutions. Saying that depositors will have access to their funds is the best course of action, he advised. "Look, since FDR, investors and shareholders have lost out in our nation. I don't feel sorry for the executives or the individuals who stopped there. However, investors are safeguarded." According to Khanna, a large portion of Silicon Valley Bank's depositors are startups in the fields of health and environmental care, wineries, and defense businesses that support the United States' ability to compete with China. "They took no chances and now hire Americans all over the nation. They simply had their money in a bank, and we are arguing that those must be insured." Yellen stated on Face the Nation that the FDIC is likely contemplating a range of available alternatives to stabilize the situation, including the acquisition of Silicon Valley Bank by a foreign bank. Federal regulators are actively seeking a buyer for Silicon Valley Bank. An option that members of the California congressional delegation urged during a call with the FDIC on Saturday night was Khanna's statement that the ideal scenario would be for another bank to purchase Silicon Valley Bank's assets. "Because these assets are not liquid and might not pay off for 10 years, he said, "you need FDIC and Treasury engaged to make that happen. Without the Treasury Department and FDIC actively assisting with liquidity with these Treasury bonds, I don't believe you'll get a private seller." However, Khanna bemoaned that there is a lag between how rapidly the Silicon Valley Bank situation is developing and how quickly the government is moving to contain the fallout. He asserted that the government does not currently operate at the same pace as Twitter. "And I believe they are unaware of the potential issue, the speed at which money is traveling, and the difficulty this may present. There is a danger associated with consolidation, but there is no systemic risk." The California Democrat expressed concern about the potential effect the failure of Silicon Valley Bank might have on American innovation because many of the businesses that did business with the bank are startups and venture capital firms. "This is such a crucial problem," he said. All of the legislation we passed in Congress, the Inflation Reduction Act, to address climate change, the CHIPS Act to bring semiconductors back, it relies on the innovation pipeline, it relies on the tech pipeline. The rapid increase in interest rates and the current systemic risk are harming it. These factors will also harm the pipeline for new ideas and ordinary people.